Welcome everybody today to today's webinar, Techniques in Probability Thinking. And today is Tuesday, April 26, 2016. Thank you very much for your attendance and taking the time out in your busy schedules to come visit with us today. I also wanted to extend a thanks to Randy Howell of My Trader's State of Mind for this webinar share, and Randy's guests from around the world. Randy represents a community of traders, as myself, worldwide, and being able to present a webinar of this type, bringing everybody together, is really exciting. The technology today is just wonderful. So before we begin, I was kind of thinking of what topic that I wanted to talk about today, and I have done some work with Randy in the past. A little over a year ago, I was part of his group course, and I must say that it was fantastic. To say it in a word, I've got so much out of it, and it has really helped improve my own personal trading. No matter what level you are as a trader, I do believe that it is very important that coaching is part of success, whether it's a life coach, whether it's a trading coach. Sports figures have coaches, multiple coaches as a matter of fact. And so I think it's very important that having a coaching staff, in a sense, in your corner is extremely important for an individual's success in an environment such as trading, which is very chaotic and can be very confusing. The topic that we're going to discuss here is techniques in probability thinking. Many of you already know essentially what probabilities are, but nobody has, at least I've never come across anybody of other educators out there to be able to explain, well, how do you think in probabilities? How does a professional trader, or a developing trader think about trades in a way where it's very not common to us? It's not something we're born with. We're not innate with it. It's like, learning to fly. We weren't born with wings, but we were able to, overcome the physics of flying, and now today flying, worldwide we take, as second nature. But humans were not built to fly, but we've mastered flight. Same thing with trading. All right, as traders, we're not built to trade. All right, we weren't born with the skills, so we need to develop skills and techniques and so forth. So this is the topic of what we're going to discuss today, and I think it dovetails very nicely with what Randy does with his clients and his work over at My Trader's State of Mind, where he gets into the details and the techniques of how to deal with uncertainty, fears, the confusion that happens, and all the emotional components of trading that well up in each and every one of us regarding how much experience you have. All right, but everybody knows about, we have to do certain exercises and try to control our emotions and so forth, but again, how to do that is the important part. People know how to trade. Most of my members that come to Polaris here know how to trade. They know the mechanics of trading. So I teach a lot more than the mechanics. I go beyond the mechanics. I teach, hopefully, life-changing techniques that they can use on a day-to-day basis and beyond. Before we get into the subject matter, though, I just want to highlight the NFA Rule Compliance 2-29, simply that hypothetical performance results have many inherent limitations, and trading in futures and derivatives on futures is speculative in nature and involves substantial risk of loss. past performance is not indicative of future results. Okay, in the next slide here, I just want to give you a little bit of background for those that do not know me. I am a 30-year, my name is David Dubay, and I am a 30-year market veteran of various investment banks and hedge funds, and I am currently an independent day trader, as many of you are, as well as an educator. My background over the past 30 years has ranged from Shearson Lehman Brothers to United Bank of Switzerland to various high-frequency hedge funds. And during that period, I was a market maker in listed and NASDAQ stocks. I also had an extensive experience trading index futures and derivatives. And with that, I was deeply involved in various parts of portfolio risk management. So Polaris Trading Group, many of you, the name is new to you, so I want to give you an outline of our mission and some of the benefits that we provide here for our membership. And I have a four-pronged mission, and we're going to start with the right-hand side just to give you an idea of what we look for. My four core mission statement deals with helping our members learn empowering trading habits. That's very, very key. All four of these are key. I want to help demystify market action. There's a lot of misinformation about trading out there, and the market is, not as mysterious as one may seem to think. And what I try to do is from the perspective of somebody that has been essentially on the inside, so to speak, working for the investment banks and hedge funds, to bring the concepts and ideas and how that side of the business actually functions. And so I want to demystify that, because most retail type traders out there or developing traders only have one view of it, and it's really a view from the outside looking in. I give our members a view from the inside looking out. And it's important that most traders out there, some people categorize them as professionals and retail. I simply categorize them as an informed trader or an uninformed trader. So that is prong number 3 on the left. Help our members become a more informed trader. Now, one may think that somebody that trades a lot of money is an informed trader. I can certainly vouch for the fact there are a lot of people that do trade a lot of money out there, and other people's money, that are clueless, that they fall into the same traps and problems that retail type traders or less experienced traders trade. So I want to help our members become informed, all right, and that's an important distinction. And the final one up the top, and the reason why I put this one up at the top, to improve decision-making skills, that's going to be the focus of our discussion today in one way. To improve decision-making skills, there's many facets to that. We're going to look at one of the facets today, and that is, of course, thinking, in probabilities. And some of this may be new to you, and of course, that's what we're all about. We're here to try to, learn new concepts and ways of approaching the market that will help give us an edge. And part of what I do for our members as well is, and I think this dovetails very nicely with my time spent last year with taking the group course with Randy, is, and as Randy talks about in his work, he talks about that there's a three-legged stool is technology, methodology, and psychology. Well, I'm gonna replace the psychology part of it, all right, if Randy will allow me, and I'm going to change that word to emotionology, all right. Technology, methodology, and emotionology. I think that's really important. And what I try to do, everybody has a technology today to, they have real good computer systems and so forth. The methodology, a lot of people are searching for, whether they've developed their own or they're searching for a solid method, such as the type that we have here at Polaris. And then, of course, the emotionology part of it is dealing with the emotional aspects of trading and so forth that I think that Randy does a fantastic job in. And if anybody, has not, looked at Randy's work, I think it's worth certainly the opportunity to take a look closer at what Randy does. Randy, believe it or not, he probably doesn't know it, but he's made several changes in how I look at things since just last year, and I've created my own personal committee of my mind and so forth. And what I do for our members every day is pass that knowledge along in a hopefully easy to understand format, all right, in an environment that is very chaotic. There's a lot of moving parts, and I do try to make it as simple as I possibly can for our members. So today's topic, thinking in probabilities. All right, it's the trader's edge as far as I'm concerned. You could have the greatest methodology in the world, but unless you can exploit that methodology, you don't have much of success. So the trader's edge, that I truly believe it's all about thinking in probabilities. All right, what are my chances of success? All right, probabilities, some has defined simply that it's the more likelihood of one outcome occurring before another. All right, again, what does all that jib jab really mean? All right, what does thinking in probabilities really mean, and why is it essential to one's trading success? All right, and here's a paradox. Random outcomes, a coin flip, for instance. All right, everybody has taken the example of a fair coin. All right, heads and tails. Odds of coming up heads or coming up tails are simply 50%. All right, and over time, there's not much, edge, on that. But if you start placing edge, let's just say the heads come up, you change it and you give it an edge, that an edge comes up, the heads, 65% of the time. Okay, so the more you flip, each coin flip is 50% heads or tails individually, but over a large series of coin flips, all right, there should be that there's an edge that comes out with heads. All right, so again, the random outcomes of heads or tails, all right, can produce consistent results. And this is a problem that a lot of traders don't quite understand. But the likes of casinos and professional experienced gamblers, right, know for a fact, right, and against, take a look what the casinos do. Facilitating an event that has a purely random outcome, right? Most traders believe, but the most traders believe that an outcome during the market favor is not random. In other words, traders come to the market and they think they can beat the market. They think they can understand that the market has shape and form, and in itself it actually does, but on a day-to-day basis they think they can understand the market's behavior and get that. Yeah, law of large numbers, okay? But what happens is traders are having difficulty producing results on a short-term basis, all right? So here's the key to what the casinos know that a lot of traders simply don't, and experienced gamblers live by, all right? And of course, the best traders around the world understand, right, that the typical, let's just call it uninformed trader simply doesn't. That the events that have probabilistic outcome, in other words, the likelihood of one event occurring more than another, can produce consistent results, but only if you get the odds in your favor. So we were talking about the edge. You must have an edge. And that there's a large enough sample size. In terms of trades, there's a large enough trades. 1, 2, 3, 5, 10 trades, not enough. 100, getting a little closer. 500, much better. 1,000, all right, now you'll have some data points where you can determine whether or not your edge is solid or not. All right, so the best traders out there simply treat trading simply like a numbers game, right? In the way the casinos and professional gamblers approach gambling. All right, so again, it is a paradox, but it is something that we can overcome. And what we're going to discuss here today is a technique that's very unique, and we're going to be able to help take that randomness of the market, embrace it, a level of uncertainty that we all deal with, embrace the uncertainty, all right, don't try to push it away, all right, and bring it together and learn how to focus on what needs to be focused on. So what we have to do is simply we have to develop a new belief. We got to change our belief systems that simply is contradictory to the current thinking. Now, I use the example of blackjack because I speak of using this analogy daily with our members. Now, poker has also been used many times as a comparative for trading, but we'll talk about that in terms of longer strategies and things of that nature. But today we want to focus on blackjack because simply blackjack is win, lose, or draw. When the rubber meets the road, right, do you take the trade, do you don't take the trade, does it win, does it lose? Okay, and that's the bottom line when we're trading. All right, all the planning and all that as part of your methodology is set in place in advance. And then ultimately when the rubber meets the road, it's the trade. So let's take a look at what the casino's edge is on blackjack. Now, it's approximately 0.8%, all right, not very large, all right, over, a variety of style of blackjack games, all right. So, but look, the house has a rule. They must play every hand, no exceptions. All right, now think about what you do as a trader, right? Do you trade every setup as part of your methodology? Okay, just a question out there. Think about it as we're going through these things. But for each hand played, there will be an unequal distribution of wins and losings, right? Wins or losses, right? It's not going to be I'm going to have 2 wins and 1 loss and 2 wins and 1 loss. You can have a string of winners and you can have a string of losers, or anywhere in between, and again, it's just an unequal distribution. Sounds like trading, doesn't it? All right, but on a collective basis, if you have that edge, whatever slight edge it may be, all right, if you play the game in terms of blackjack the correct way, on a collective basis, right, actually patterns emerge, right, and you're able to produce consistent and ultimately predictable results, and they're actually statistically reliable over a period of time. Okay? Now, take a look at trading for an instance. All right, so you have the little image up there, buy, sell, right? There's only 2 choices. And what the trader's edge is his or her particular methodology. So whether it's a scalping methodology or a swing trading methodology or somewhere in between, okay, the trader's edge, right, is what they've determined to be successful over a large data set. Okay, now in order for that trader though to exploit that edge, what does he have to do? He must execute every trade setup as defined by his methodology. He can't say, well, I don't think I'll take this one because it doesn't look right. If the criteria is there, he must take it. Just like the house in the casino, they must play the hand every single way. All right, and for each trade, right, executed, there'll be an unequal distribution, right? Series of winners, series of losers. Okay, these are things that we need to embrace, these ideas, right? Because it's very important that you start thinking in terms of, okay, I understand this can happen, I can understand that can happen, and we know that anything can happen in the marketplace, all right? But I know my methodology is solid, and the only way, the edge that we may have, all right? So let's just say we can say that we have an edge on our methodology that, you know, mimics the casinos, right? 0.80%. That's not a big edge. That's a very, very fine edge. But that's what we have to work with. Well, in order for the casino to exploit that edge, right, and to make money over time, they have to trade, or they have to play that game the same way. Well, we as traders, we have to do the exact same thing. And as soon as we stop doing that, all right, we invalidate our edge and our method, and all of a sudden we get into the emotional states of things. And again, that's where Randy's work comes in. It comes to the rescue. Learning how to control our emotions, not suppress them, but just control them, and bringing bringing that part of our methodology. And I view Randy's work as part of my methodology, all right, as an important part of that three-legged stool. And it's important that we have all three. So, but on a collective basis, all right, if the trader's methodology has a positive edge, all right, then many trades over a period of time produce consistent results. Now, again, this is a belief that you need to embrace, okay, and this is one certainly that professional traders embrace as well. All right. Now, we need to develop a logical approach to thinking in probabilities, right? We've all known the adage of garbage in and garbage out, right? This is what we call the input-output loop. And it simply is, you put in trash and you're going to take out trash, right? You put in good stuff and, what will come out is good stuff. Now today, unlike traders of the past, of yesteryear, where, traders of the past, let's just say in the real past, many, many years, 50, 60, 70 years, they don't have the access to instantaneous information that we all have today, between earnings reports, Twitters, blogs, opinions, and so forth and so forth. Right? We have simply an unlimited amounts of market information, and we're just simply bombarded with it every day. What this tends to create is analysis paralysis. This tends to create a level of confusion and uncertainty. Right? This person is saying that person is saying this was a news event here, something happened overseas and so forth, and it creates this confusion in price action that the untrained trader, okay, has to deal with. And if they don't deal with it effectively, and they're grounded in some way for themselves, right, they're going to be just running around like that proverbial, chicken with the head cut off, right? Not knowing what to do. And unfortunately, confusion and uncertainty simply breeds fear. All right. So what we need to do is we need to develop a technique that filters a lot of this information, and we only want to take from the information that's provided to us today. All right. We need to know what the relevant information is. And the relevant information that is specific to our goal, specific to what we need to do, right, to succeed, all right? And simply all the other stuff is we can just, throw it in the trash can, all right, because it's garbage. So we want to take the best of information to help us, all right? So again, keep all these things in mind. And what we're going to show to you today is, and we're going to pass upon, is a technique called the OODA loop decision matrix. Okay, and this is a looping process that continuously repeats itself, right, throughout the day. And during the day, our members know that I am demonstrating this verbally for them, all right, throughout the session. We talk about the market, we make our analysis, we look at levels, and we get an understanding of what the market is doing at that time, what it has done. We make no predictions of what it will be doing, but we do know what it has done and what it is currently doing, and we orientate ourselves, all right, and put ourselves in a position to say, okay, this is what it is doing, and we don't know what's going to happen, but we're getting ourselves set up for to start looking at the market in a different way. So what the OODA loop stands for is observation, orientation, decision, action. So simply the observation part of it, right, does not take much aside from our eyeballs. I call it the eyeball analysis approach. And, simply observing price action from a series of, higher highs and higher lows, etc., lower lows, double bottoms, double tops, things of that nature. Things that you already know how to do, but you may not be mindful of to do, in the forefront of your thought process. All right, and once we've made an overall observation, we want to take that observational data, right, that we use, and we want to kind of orientate it, right? Again, we want to take what's relevant, right, and then ultimately discard the rest. So what is it? Is it trend up? Is it trend down? We have sideways. Context, as our members know, I talk about quite a bit throughout the weeks. All right, is that context is important. If you don't know the context, you're not going to make good solid decisions. Now the second part of, once we have that first two, the second part becomes the decision loop. So think about this kind of a looping process, right, in your mind, right? Observation, orientation, higher highs, higher low, trend up, trend down, etc. And then once we have that, then we start looking for our own particular setups, our methodology that has an edge. We're looking for buy the pullbacks. We're looking to sell the bounces, all right, to certain levels once we've identified what those key reference levels are. So what price do we want to enter? Where would be our stop loss? What's our position size, etc. That's the decision cycle. And much of that, by the way, in the decision cycle should be already in place, and we help our members in many ways get those parameters in place for them. And then at the final part of this OODA loop process is simply where the rubber meets the road. It's taking that blackjack, win, lose, or draw. Do I hit on 17 or do I stand on 17? Do I hit on a soft 16? Do I, all right, or do I stand on it, etc. All right, so that's where we need to take the appropriate action. All right, and it's going to be based upon a concept called if, then, else. All right, so now, before we get to that, I want to give you a little bit of origin of the OODA loop itself. All right, the OODA loop model was originally developed back in the Korean War time by a gentleman by the name of Colonel John Boyd. He was a U.S. Air Force fighter pilot, and he actually has a nickname called 42nd Boyd. And just let me mention about what that 42nd Boyd meant is he was a pilot instructor, and what he did is he challenged the best fighter pilots of their day, all right, to a mock dogfight. And from a position of disadvantage, meaning that he was the defender, okay, he challenged them that within 40 seconds, he would then gain the advantage on the aggressor, become the aggressor, and shoot that opponent down, simulated wise, of course, within 40 seconds. Now, you can just imagine in the briefing room back then, all the bets that were going on and the testosterone that was flying around out the window. Sure, no way you'll do it. I'll take that bet. Well, as it turned out, and you can read this online, he didn't lose a dogfight. Never lost one. So what I have done here is I've taken Colonel John Boyd's approach and I've adapted it to trading. I am a pilot myself, so though not a fighter pilot, but I can understand the premise of his model. And again, in an environment where we're very It's chaotic. Things are moving very fast, especially with these high frequency algorithms that we got going on, with us today. We need an approach that will ground us in a sense, right, in a solid rational behavior approach where the rest of the market is, what seemingly looks irrational. So the OODA loop is what he coined it and called it, and what we've done here is to adapt it. So along that line, I wanted to just show you the OODA loop in action with what Colonel John Boyd would be experiencing as a fighter pilot. Now again, think about this though in terms of what you go through in the markets, right? There is quite a bit of correlation that goes on here. So looking at these images, all right, you have an aggressor, you have a defender in a dogfight, in various configurations of a dogfight. All right. Now think about what's going on in these pilots' minds. All right. Now this isn't simulated. This is real life, life on the line, right? Action going on. All right. So if you were a fighter pilot, put yourself in that cockpit. You have a lot of uncertainty going on in your mind, right? There's confusion galore, right, between rolling and spinning and going back and forth and trying to keep your eye on the opponent while you're flying the plane, et cetera, et cetera. There's a lot of confusion going on. Well, think about that when you're trading. Markets are moving up very fast. News announcement comes. Markets blast up X number of points, and then before you know it, in an instant, they're right back down. Okay? Again, adds a lot of uncertainty and confusion to our trading. All right? Well, what does that breed? All right? Fear, right? I mean, I think it does. All right? And that's a normal human emotional type response. All right? And what do you do when you fear, right? I mean, this is your ultimate fight or flight scenario here that you're looking at on the screen, right? In real life consequences, right? In trading, well, it's not life or death, but but our bodies and everything react in that way. So we don't want to react in a confused manner. There will be a certain level of fear and without a doubt uncertainty, but we want to take, who's going to be the winner here? Now go back for a moment and what I just said about Colonel John Boyd. Within 40 seconds, he gained, all right, the advantage over his opponent, all right, from a position of disadvantage, and then was able to shoot him down. All right, very interesting. So now what we got, all right, is we want to move on to the more individual parts of this technique. All right, so the OODA loop and trading decision making. So remember, observation, what we want to do is we want to scan the market environment, gather that information very simply. All right, we want to orientate it, right? We want to use the information and form mental images. I put a picture up there. We got to, and that we look at on a day-to-day basis, right? The market is trending higher highs and higher lows. It's starting to go into sideways condition. Just simply use normal, everyday, English in order to basically, just in layman's type terms. You don't have to get technical. All right. If you want to say it's choppy, sloppy, say it's choppy, sloppy. Okay. And if you want to, define what the market is doing, define it in your own way. But what you want to do is you want to be able to orientate yourself in form of mental images, right? This helps synthesize that data in a simple format. You don't want to get too technical here. You don't want to start talking about, head and shoulders patterns and symmetrical triangles and this and that if you're not really familiar with that terminology. Keep it simple, all right? And the important part is you want to stay in the now, very mindful of what's going on, right? Very important, right? So again, garbage in, garbage out. Keep that, right? Keep the orientation as simple as possible, right? And again, some of the best traders in the world, right, do exactly this. They don't need a lot of information. They need the more relevant information. All right, and it takes time, and it is a technique, and it is a skill set that we need to build to develop that type of of skill. All right, so it's not going to be something that's just going to boom immediately happen overnight. All right, it will take time, it will take effort, but I will assure you that it is well worth the effort. All right, and one of the things I like to use, and many of you have probably heard this statement: trade what you see, trade what you, what is it? Trade what you know, no, trade what you know, not what you see, or something like that. I forget exactly what the statement is. It is trade what we know, verify what we see. And what I'm saying by here is trade what we know. What patterns do we know? What things do we look for that are repeatable, that we've been able to look in the past and be able to understand? And then once we see those patterns, verify them. Okay? Thank you very much, Jay. Trade what you see, not what you think. Thank you. I knew it was something along those lines. What we like to say, though, is trade what you know, verify what you see. All part of the orientation process. Now, once we get there, we get into that decision cycle, right? So we want to consider our options. We want to select the subsequent course of action. In essence, what we want to do is we want to get into our trade setups, all right, our A-plus trade setups. What's my best trade setup for this scenario? Now, the scenarios are going to change. Bullish scenarios, bearish scenarios, trend, non-trend, right? What's my best trade setup for this scenario? Again, you need to know that, all right? And here at Polaris, we have those setups already pre-established. It's just a matter of knowing when to use them under the right, in the right context, okay? And so the final part of this OODA loop is simply carry out the decision, all right? Rubber meets the road. And then once the result of the action is observed, what you do simply is you start over. Once you're in a trade, you go back to that observation orientation, okay? But the tempo is increased a little bit, all right? So when you're scoping out the market, all right, it's just, it's a slow, methodical tempo. And then when you're in a trade, all right, markets are moving a little bit quicker now. You're in a trade, you're managing it, you're looking for your exit points, you're looking where you have your stop levels in, etc. All right. So again, the idea of this loop, all right, and then the note here down bottom says, note that in air combat or in trading the financial markets, you want to cycle through the 4 steps faster and better than the enemy. In other words, the other traders. Okay. Hence, it's a looping process. Okay. All right. Let's get into a little bit more details here about it. So in terms of thinking through probabilities, we need to think in terms of a computer, right? So on the image on the right-hand side, you'll see what's called a conditional statement. Many of you are already familiar with it. Some of you may not be, all right? But programmers need to program their computers to execute certain tasks. And the tasks that are multiple type tasks, they can be very simple tasks, they can be very complex, all right? But the process is simply the same. So what we want to do is we want to, in our own minds, but again, in our minds, we want to kind of keep it as simple as possible, all right? We don't need to have these complex type algorithms in our own mind. We want to keep it very simple, all right? So what you do is what computers are doing, right? You want to give yourself a set of instructions or conditional statements, all right? We want to be very simple about it. All right, and the statement that we're going to simply use is if, then, else. All right, and I write a daily trade strategy every day, and our members, that read it on a day-to-day basis, you'll see that I use these terms quite a bit. If this happens, then X. All right, or otherwise, we may have to reassess. So again, many of the statements that we make, all right, in mathematics. And again, I don't get into any real mathematics here. I want to keep it more conceptual. But we do have to, understand how this is formed. So if P, then Q. All right, simply we like to mind our P's and Q's, as our parents would always say, right? And these are direct proofs of conditional statements. A conditional statement is nothing more than if one part of a statement is true, all right, then a second half of the statement must always be true, okay? So it's part of critical thinking, right? And this is what we want to do on a day-to-day basis. I'm going to show you some examples here exactly what we mean by this, all right? So don't get too crazed with the, with the P's and the Q's, but understand that if the assumption is P is true, then you want to conclude that Q is true, all right? And if it's not, then we do something else with it. So the if, then, else statements to keep traders thinking in probabilities. Here's our technique now. All right. If this happens, that's our hypothesis, then that will happen as a conclusion. Now, I made a little change to this statement. And instead of saying, if this happens, then that will happen, I changed it that may happen. Okay, because in trading, nothing is as absolute as it is in a conditional mathematical statement. There's a lot of variables that go on to that. So, but the structure is the same, and the thought process is the same. If this happens, that's my hypothesis, then what is more likely to happen would be the conclusion, and that is the idea about thinking in probabilities. All right, you do not want, there's no certainties. Right? We live in a world and trade in a world of uncertainties, so we want to bring some sense of uncertainty, and we want to deal with that uncertainty. And this is how we deal with it, okay? This is the way we remain flexible as a trader, thinking about, all right, what is currently happening, again, using that OODA loop, observation orientation, right, and then getting into that those subcycles of decision action. So once you've observed price action, and again, orientated yourself to the correct side, right, bullish, bearish, trend, up, down, sideways, right, the next phase becomes our decision and action cycle. And this is where we're going to utilize the if-then conditional statements, okay? So very simply, right, we'll start getting into some charting terminology here. If price makes a new swing high, in example 1, then buy the pivot pullback. If price does not make the higher low pivot, then do something else. Stand aside, reassess, go back to the OODA loop, all right? And in example number 2, and we'll take a look at these graphically, by the way. If price does not make the new swing high, then assume price will attempt to retest the lower zone. We want to repeat that process of looping. And then our third example, if price holds the lower pivot zone, then look for price to make a new swing high. If price makes a new swing high, right, then we want to buy that first pullback, and then our expected outcome will be even for higher highs. You see how we're structuring our thought process, right? You don't want to ask the questions, will it break out, or will it hold, right? Or what's it going to do? Those questions actually feed the uncertainty part of trading. We want to try to push away that uncertainty. We know it's there. We know it's uncertain. We don't know what's going to happen. We do know anything can happen, but we want to structure our thought process, right, in a way similar to how those computers are programmed. Okay, does that make sense to everybody so far? All right, so if P is true, then we prove Q is true. All right, so now let's take a look at this graphically. So if then else in the graphic examples. Okay, terrific. All right, so on that first example, all right, and again, follow along on the charting side of it while I read the if then else statement. All right, so if price makes a new swing high, then we want to buy the pivot pullback, right, so with a higher pivot low. Okay, so if price does not make a higher pivot low, right, then what we're going to do is we're going to do something else. We're going to stand aside, all right, that type of thing. All right, so, all right, so again, here's the first example. If the price makes a new swing high, right, and pulls back, which makes a higher pivot low, once it pivots, we're going to be looking to enter that trade on the long side, right? And then we'll place our requisite stop where it should be under the pivot low. And then the expected outcome would be for higher highs, right? So if P, then Q. All right, so now in the next example, if price does not make a new swing high, right, assume price will attempt to retest the lower pivot zone. So we're in this sideways type range here, right? Price comes up, hits the top part of the range, comes down, hits the bottom part, hits the top part, et cetera, right? And so if price fails to make a new swing high, the assumption will be, again, we're making an assumption, so if it fails to make a new swing high, the assumption would be, well, the expected outcome would be, all right, to come back down and test the lower low, and then you start the process all over again. If it holds, right, then we'd expect it to come back, up, okay? Now, again, do not ask the question, is it going to hold, et cetera, et cetera. Now, we have additional techniques, all right, that we get into reading the market's action, the order flow, et cetera, that will help when it comes to determining what's the likelihood of it breaking higher, what's the likelihood of it breaking low. We get a little bit more deeper, but today we're giving you more conceptual aspects of learning how to think in probabilities. All right, guys, these are very solid techniques that professionals have used for decades. All right, so then the last example here, again, follow along with the chart. If price holds the lower zone here, so there's multiple tests of lower price zones, proving so far that that level is solid support, then look for a price to make a new swing high, all right? And if there's a new swing high, then we want to buy that first type pullback, all right? And then, of course, the expected outcome would be even higher highs. So here's your if then else, right? So here's your higher level resistance, multiple tests of the lower level, solidifying the expectation for support. Price then, if it holds this lower level and then takes out the higher level, all right, that becomes our first sign of strength. All right. Do we take a breakout trade? That is a higher risk trade to take a breakout because, again, look at the scenario 2 here, all right, where, again, a lot of times prices will just pop upside the upper end or lower end of the range, but don't break out. And all of a sudden, that's what we call a stop probe. We've all experienced that. We've all seen it. All right. And it's a false breakout. Okay. So what we like to do here at Polaris is we're aware of that. We always talk about, probing for stops. But we want to actually see it break out, and it needs to break out with volume, all right, and usually by a certain amount, price-wise. But we won't get into the details of that here. Then we want to look for that pullback. And then once we get the pullback that holds the breakout, that's when we want to buy it. That's our lowest risk, greatest profit potential entry. And then again, the expected outcome would be what? For higher highs, or if the case of a breakdown, right, for lower lows. Okay. Again, it's a thought process. So if you take a look at these 3 examples, what you're looking at is the OODA loop in action. All right. We're observing the market. We're orientating what the market is doing. So is it an up move? Is it a down move? All right. Is it an uptrend, downtrend, sideways type action? What are the key levels, right? Price held this level, price held the upper level. And then now that condition remains in effect until something changes. So that's what we're looking for. So we've done our orientation and our observation, and now we're looking for the change in the character of the price action in these, say, examples. All right, and once we see that change that meets certain criteria that we lay out in our methodology, all right, then that's when we start taking action. But the thought process, no matter what you're doing, not just these three examples, but throughout the entire marketplace, what you want to be doing is training your mind to think in terms of how the computers and the professionals have programmed these computers to look for certain criteria, look for patterns, all right, that are effective and that they repeat. Okay, this is a very important technique, and they're really of the professionals that I know and I've learned from. This is a technique that they have used for decades, and one that I've learned years ago. But I did not learn it in the terms of an OODA loop like Colonel Boyd did back in the Korean War, and I've learned it in a different way. But when I came across Colonel Boyd's work, it resonated with me. It just popped out of the page that I was looking at, and I needed to adapt that to trading. And it has served me very well, and I know it serves our members very well. And this is a technique that certainly takes practice. Right? This is an initiation webinar on this technique, but it is a very, very important one. Okay. Well, the proper target in terms of range and ticks and so forth, you know, again, that's beyond this webinar. You know, we have various targets for various setups. Okay, but you know, that's something that we could, you know, delve in greater detail about with our method. All right. Now, just to summarize here, okay, and you know, thinking in probabilities requires the trader simply to accept a new belief that random outcomes, given an unequal distribution of wins and losses, can actually produce consistent, predictable outcomes. It is a stretch for many, but it is something that I truly believe that one needs to embrace. All right. What you simply want to do is we're trying to stack the odds in our favor, and have a greater number of, or not just wins versus losses, but the magnitude of wins that are greater than the magnitude of losses over a large series. Again, what's a large series? Right? At least 100 trades at minimum. The larger the better. All right. And remember, each trade is statistically independent, just like the coin toss we spoke of at the onset of the webinar. 50-50, right? Every coin toss is 50-50. And each trade or each flip is unique. All right. This is by the way, some of you will probably recognize some of these terms from Mark Douglas's work. Okay, and you know, each trade is a unique event, and I truly believe that, and you have to look at it simply that way. All right, that every trade, regardless of even if you have an edge on it and the setup is perfect, it may not win. We had a perfect example of that in yesterday's session, right, where we had a perfect discount type formation, and all of a sudden, all right, we entered the trade and we ended up, you know, underwater on it for a bit, and we persevered, and finally, you know, it came back for us. But you know, that's just part of the trading. You could have the best setup and you could still lose on it. But the idea is, just like in blackjack, you play that hand each and every time the exact same way. All right, and it's important that you know, you do that in trading any methodology. Okay, keep that in mind, even currently the ones you may be trading now. So by utilizing the PTG OODA loop decision matrix, observation, orientation, decision, action, will keep the trader focused on the relevant information, right, that's necessary to make more knowledgeable, quote unquote, informed trade decisions. All right, we want to be informed traders, so we want to make sure we have the best information We want to make sure we take the best setups, and even stacking all those odds in our favor, right? We call them odds, right? Whatever that edge is, there's still no guarantee with the uncertainty that goes on every day. There's still no guarantee of success on each one of those, on each individual trade. But over a large series of trades, that, remember, that's the paradox. Random occurrences, consistent outcomes. All right, that's the paradox. And so if professionals and the computers are programmed to identify and exploit probabilistic trade opportunities, right, specific edges, right, so must each trader develop thinking skills. That's our edge, by the way. All right, keeping our emotions in check, focusing on our thinking skills, keeping our attention and mindfulness where it needs to be focused, right? That's our edge. And of course, if you have a methodology edge that has a proven edge mathematically, right, we need to exploit that in every way possible, okay? And that will aid in identifying our specific trade opportunities, as I mentioned. So finally, the if-then-else conditional statements will be the technique the trader will be using and focusing on to keep us in the now moment, right? Mindful today, right now, what's in front of us, okay? Asking the correct questions, not will it break out, will it hold? No, those are the wrong questions. We want to ask the relevant questions, the ones that keep us focused positively in what is going on in the marketplace at that moment in time, all right? The most relevant data available, and that's where our edge will be, all right? Focus on the trading process, as we always like to say, not on the outcomes, all right? Too many traders focus on outcome, right? And they forget about the process. You cannot reach the outcome unless you focus on the process. This technique is all about focusing on the process. All right. We have a few minutes left. I'll keep the floor open for some questions. While I'm doing that, I just want to make a special offer to all our guests. And again, I would like to limit one trial, all right, within 60 days or so. So if you've recently taken a trial of the past few weeks, all right, you know, give me a call, drop me an email. But for those of you that are new to us, and you know, normally we offer a 7-day trial on a day-to-day basis. This is a special offer to make sure, you know, you come in, visit us for 14 days. That's essentially two full trading weeks. All right, there's your website, okay, address. You can contact me at, of course, at the number there below, or the email, david@polarisTradingGroup.com. Okay, you can visit us very easily if you visit us on our website. All right, you can just in the top right-hand corner, you can click on the free trial. All right, so let's get to a couple questions, and we'll end our webinar there. The results on your website are outstanding. Are the trade results posted on your website verified, or the trades called out in the room actually have been executed by you? Okay, so I get this question a lot, and they are verified. They are time-stamped. They are they represent trade method trades that are validated by a verifiable setup that occurred on that day at that time in terms of our premium and discount setups. And they may or may not represent an actual trade that's taken by myself, right? So they're not a performance report from the standpoint of my personal performance or any one of our members collectively, but they do represent a live trades that were available to everybody, you know, equally. Okay. All right. So Randy speaks highly of you, and get a strong foundation and discipline and strong trading plan to go along with what I have learned in Randy's course, like the OODA loop principle. Yeah, and again, I share the same thoughts with Randy and his course. And again, I have taken Randy's course. All right, I've taken his group course, and it's a tremendous benefit to everybody. Okay, so I think what I do here at Polaris dovetails very nicely with what Randy works with. And again, Randy teaches actual techniques to overcome and deal with the uncertainties and the fears and so forth that we all experience. Does not matter what level of experience you have. We all are the same. And I think my approach here at Polaris, again, dovetails nicely with what Randy does, because as part of my teaching methodology itself, my style, if you will, I bring in a lot of those concepts to our membership. I'm not a mechanical trader. I'm a very conceptual trader. I teach concepts to our membership. I don't teach you the mechanics of trading. All right, most everybody knows those, and the biggest part of where people want to learn and perhaps need to learn is in the more conceptual aspect, of the markets and so forth. Okay. Yeah, a lot of people have difficulties in that area, but again, they're not. You can overcome them. All right. Again, like I said at the beginning, I think everybody needs coaches. All right. And it's not a sign of weakness, by the way. Coaching is actually a sign of strength to become better. And if somebody can help you become better, and that's the whole idea of Randy's work and my work, and anybody that is that's a coach out there. Coaches are there to help. All right. So coaches are there not to do the work for you, by the way. All right. You have to do the work. They're gonna bust them on you. Right? You have to be willing to do the work. Otherwise, you don't get the benefit of it. But a coach encourages, inspires, keeps you on the right track. So I think everybody needs some sort of a coach somewhere. Again, I do, and I've been in this business 30 years. All right. So do you only trade futures? Right now, yes. We only trade futures day to day. We trade the S&P, NASDAQ, and crude oil primarily, but everything that I do and the method is applicable to individual stocks, all right, and various other instruments. Okay. Yeah, if you've taken a trial, for just a couple days, and look, just drop me an email, and I'll be happy to re-up you. All right. I'm just looking not to have people, they're professional, trial takers. All right. So let's see. Hey, Mike, good to see you. All right, Mike. Mike and I go back a long way. Yes, everything is doing well. Yes, you're welcome. All right. Thank you very much, Karen. All right. Do I trade Forex in the room? No, but we do actually. The methodology it certainly is applicable in that area. We just don't have anybody, nor myself, that has the attention to focus on FX, but definitely registers in that area. Do you consider what to do in probabilities to be actual methodology? I saw Darvis breakout, or advanced training and probabilistic. Do you consider what to do in probabilities? All right, to be an actual methodology. So do I think of thinking in probabilities an actual methodology itself? I think probabilities is a necessary part of any methodology. All right. I don't necessarily, it could be, I suppose you could think of it as itself as a method. It is a method. I mean, it's a way of thinking that you need to train your mind. All right. And by the way, this is only one approach to thinking in probabilities. This is an approach that I've learned over the years. It's not the only one, but I do know it is it's an approach that many professionals simply use. Okay, and so it is something that, but it could be, I suppose, its own methodology, right? Have I ever done or offered private mentorship? I do. It's not listed on my website. If somebody wanted certain personal attention, I can do it. I'm not necessarily, that's not the main course of what I do, but I have worked with our members one-on-one in many cases. If you feel as though you're somebody that needs truly that one-on-one, all right, I think it's something that we need to discuss. All right, absolutely. Okay, so I take that on a individual basis, one-on-one. All right. All right. Well, thank you very much, everybody. And again, I appreciate your time taken out of your day, and it's great to see some folks that have been with us over the past, and definitely some of the new folks that have come in from Randy's group. All right. Again, do take advantage of the 14-day trial. All right. It's worth your while. It is, no obligation. All right. Come on in, kick the tires, see what we do, and see if it's something that you're interested with. All right. And again, my goal is to extend my 30 years of experience to those that are interested. And we have a great group, and there's a lot of benefits to being in a group, supportive. All right, I could go on and on, et cetera. So, excellent. All right. Okay. All right, I'll take a look at that, Victoria. All right, well, thank you very much. Yes, drop me an email. Again, the best way to reach me, all right, is drop me an email, david@polarisTradingGroup.com. We can set up a time, all right, for getting together. Anybody that's interested. Is there a time limit on this trial? As you can see here, it's a 14-day trial. So from the day that you begin, all right, it's 14. Again, I'm not a real stickler when it comes to 14 days. All right. I mean, if you started on, let's just say, a Wednesday like we, or Tuesday like we are today, you'll end up probably getting, sometimes 2 weeks, 2.5 weeks, type of thing. All right. So again, I'm not somebody that's going to bump you out. All right. What I'm looking for is, serious-minded traders, people that want to learn. I'm serious-minded in what I do. Okay. And so it's a mutual type, arrangement. Do you trade naked or with indicators? We have very few indicators. All right. But we do have some indicators, and that's part of our premium and discount system. But we're primarily price action traders, right? We trade price levels and price structure, and we combine a lot of different methodologies, right, between profiling and average ranges and cycles and so forth. Okay, so it's all part of that. Do visit the website. There is a lot of information available to the public on the various segments in the videos. All right, one of the videos referred to as methodology overview is very good. So that's something that's available to the public. When you do sign up for a free trial, you will get an auto email, and you will be sent password information and link information to get to the room. So again, go to that link right there, right, that's showing here, right, www.PolarisTradingGroup.com/free trial, or click on it on the right-hand side of our main page, and we're all set. All right. If anybody does have any issues getting in, we'll easily resolve those. All right. Okay, well, thank you very much, everybody. We've gone over our allotted time, but we appreciate the time spent with us, and I hope this has been informative for you, and hope to see you everyone in our trading room, and good trading to everybody. All right, all the best of success. Thank you, guys.